Robinhood, like the US broker, for some time they've talked about tokenizing stocks. So what do they mean by that? Say you can buy like Tesla stock in the market today, and if you buy it on Robinhood or other smaller brokers, you can buy like fractional shares. Where they're talking about putting those stocks on their own blockchain. I don't have a problem per se with that, but I do have a problem with some comments that very controversially given away tokenized stock in a couple of very big headline private companies, notably SpaceX and OpenAI. Maybe there's more in the pipeline. And this is a very, very bad idea. And so that's kind of where I want to go with this topic. As I said, I'm a SpaceX shareholder. If I wanted to buy SpaceX stock, and it's complicated, like I can't because I'm not wielding like a multi-billion-dollar portfolio, so I can't go and buy stock directly from the company when they have like their Series G or Series H, like their next round of private funding. So what I have to do is I have to wait for like an existing insider to want to sell some shares, like a employee of the company, maybe their stock options vested and they want to realize some money to buy a house or whatever. So an existing insider sells some stock, and the kind of like the broker I worked with, they set up a special purpose vehicle. It's like a special kind of company that only exists to be like the shareholder of that stock. And then essentially I'm a shareholder in that SPV company, like me and a bunch of other people. So simplistically, someone identifies that maybe there's $10 million of SpaceX stock available, puts in like a bid for it, says, well, I'll buy it at this price if we can agree terms. That gets agreed. They create this standalone company whose sole purpose is to own the stock. Then they chunk it up into, $100,000 pieces, $1 million pieces, sell it to a bunch of individual investors, and then the deal happens. SpaceX don't know who the hell I am. I'm just like a minority shareholder of a minority shareholder. But in theory, I hope I own stock. Now, Robinhood are proposing doing exactly that, buying, I think, $10 million in each of these companies, and then creating like an SPV, having a custodian hold and manage the stock, and then issuing tokens. So the problem, can you see like the big problem with this? Say we've got like SpaceX, a $300 billion company, and suddenly you have, let's say, I'm making the numbers up a little bit, but I think this is directionally right, $10 million worth of that company on a blockchain and theoretically available to anybody. Like, can you see what's going to go wrong if you do that? I'll give you a clue. It's to do with demand and supply, and the fact that like a lot of people want to be SpaceX shareholders, but maybe they weren't lucky enough to be on the email chain I was on when I had the opportunity to jump on board last year.
Are you talking about like somehow like diluting, like creating shares out of thin air somehow?
Well, not so much that, but essentially demand and supply, right? Like, and if you've got, let's say you've got a $300 billion company and you take this $10 million chunk of it, which is like, what's that, like a third of a percent of the company or something, like a tiny, tiny fraction, much less than that actually, like tiny, tiny, tiny fraction of the company. But suddenly you make it available to regular everyday investors. And there's so much hype and momentum around companies like SpaceX and OpenAI, right? The value of those tokenized stocks is going to skyrocket, right? Because there's so much demand for them and there's only so much supply. So suddenly the guy who, like Robinhood, as this middleman, they've got this massive arbitrage opportunity because they've created this market that didn't exist before. They're selling like the tokenized stocks and there's a huge demand, and the tokenized stocks could literally become like 10 times or more the value of the actual underlying thing.
So this is, let me ask you, let me pause you there, double check, because this is a weird thing I discovered, like, in the cobweb, dark alleys of the regular market. Most people don't know this, but when you see a price go up or down, like the stock ticker, that's always based on liquidity. So for some major companies, most of those shares are basically somehow locked up, call it locked up. They're in whatever investment vehicle, and they don't really trade. So when you see prices going up and down, it actually could be a relatively small percentage of people that are moving the shares up and down. Now, in the open market, that's just kind of how it is, though you think it's the whole value of, like, it's like millions of shares, right, going up or down that are creating the price flow. But that's not really how it works. That's why, by the way, in the trading world, volume is so important, because it tells you how significant the signal is. But basically, what you're telling me here is that this is a way to create, call it, artificial constraint, which I don't even know what that would do, like you were saying, to the, call it, legitimate or a majority of the other shareholders.
It's weird, and it creates a really bad incentive on Robinhood for exactly the reasons you said. Like, they've bought this tiny allocation in a highly illiquid company that is in demand, but there's no supply. Like, you can't go out and buy SpaceX stock. It's very hard to do that, and it's not available to the large majority of investors. And I got lucky having the opportunity. And even then, my opportunity might be fraudulent. I might even not even own stock, right? And those are the risks of being a private market investor. Suddenly you say, okay, we know we've really bought these shares, and maybe you can evidence it, and they've issued the tokens, and everyone goes, well, this is like great, I can buy SpaceX, and they buy like $100 worth of tokens. Well, there'll be huge demand for those $10 million, and it's not at all out of the realm of possibility that if you just looked at the tokens, like the paper value of SpaceX could 10x, could be like a $3 trillion company. Now, real SpaceX, nothing's really changed, right? Like, some guys over there were doing some nonsense with like $10 million. It's not relevant. The real value of the underlying hasn't changed. But the token holders will be going, woo, we own this thing, and there's like demand for it. And these tokens just will trade because of like hyper momentum around the token, not around the underlying thing. But it creates this horrible, horrible incentive for Robinhood, because they have created this market, and they say they're doing the right thing for like democratizing investing. So suddenly they've got these tokens that maybe imply like a $3 trillion valuation, but they can buy stock if they can continue to expand their SPV. They can buy stock in the market, the private market, at a $300 billion valuation. So they got this like massive 10x arbitrage opportunity. So despite what they might say they're going to do, like, they're so heavily incentivized, they're going to do that. They're going to buy more underlying stock, put money in their own pockets, and issue the tokens at the current value. So what's that going to do? That's going to, like, you'll get this vicious cycle over time where you're massively going to dilute the token holders, like the buyers of this thing, who think they own SpaceX, and maybe they do, but they're owning like a increasingly tiny proportion. Because if, like, say there's $10 million worth of stock, and you bought in that round, and maybe Robinhood go, whoa, this is great, like, look, we've got this arbitrage opportunity, let's buy another $10 million. Well, they're selling that into the market at the $3 trillion valuation. So the original token holders have just essentially, if you really weed through the maths, like, they've lost 90% of the value of the thing they actually invested in, because it's so disconnected from the underlying thing. It's just a really, really ugly situation. And it won't happen so much with public market securities, but only because, like, those are liquid markets. And other people, like the market, will arbitrage that itself, and the market will go out and buy stock in the public market and then sell the tokens or whatever to like arb and steal some value, essentially, like eke some value out of the system. But in this private market thing, because it's hard to buy SpaceX stock, like, Robinhood are really the only people who can arbitrage this, and you can bet the bottom dollar they're going to.
I know you really wanted to avoid me going into Chainlink stuff, and I will. I promise. No, no, but I only will say that I think this is why a big boy protocol like Chainlink is necessary for all these future tokenization projects. You need all the financial institutions to be above, not to be able to play these kinds of games. And given Robinhood's history, unfortunately, it's sort of in their DNA to play at the edges. So I'm glad you're talking about this, and I think this only bolsters my case for Chainlink's future, because this is the very beginning stages of this kind of shift to tokenization, which is, I think, the legitimate future of finance. It's just that these growth spurts do continue to have these wild west shenanigans, if you will. So thanks for pointing this out.
Yeah, yeah, good stuff. Yeah. So anyway, be like buyer beware. A bit like the thing we just talked about with like garbage financial journalism. If you see a deal that looks too good to be true, like just apply your skeptical brain and be
Yeah.
careful when you mess around in these deep dark waters.